Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Palantir Technologies PLTR stock and Twilio's TWLO stock, which are two of the best stocks to buy right now on the stock market. We will look at the latest price targets and price predictions for these companies. I will go over some news updates, how the stock prices of these companies will perform this year, next year, and the year after, and lastly, we will perform some stock analysis, which will tell us why hedge funds are selling these stocks and why these particular stocks are falling right now. For more videos on Palantir, Twilio, SoFi, and NEO stock, smash the like button right now, comment your thoughts and price targets down below for these companies, subscribe if you are new, and now let's get right into today's stories. So Twilio, ticker symbol TWLO, currently trades for $133 per share, while the low-end analyst price target for the next 12 months is $200 per share. The average price consensus among professionals for the company is $336, and the high-end most bullish positive price target for this stock goes all the way up to $550. So according to the average price consensus, at a minimum, we should be able to double our money over the span of the next 12 months, according to analysts. On the other hand, we have a Palantir, ticker symbol PLTR, which currently trades for around $11 right now. The low-end analyst price target is $9. The average price consensus among analysts for the next 12 months is $15 per share, and the high-end bullish price target for the company is $25. So clearly, just looking at the price targets among professionals and analysts, Twilio does seem like the better buying opportunity, at least based off of these price targets. Now, I do want to mention that both of these stocks are loved and beloved by retail investors, that both performed very well initially and then they started to crash. So we're going to discuss why they are crashing, if it's a good buying opportunity, and if they are going to be fantastic long-term investments. So the reason why these two companies' stock prices have been crashing along with the overall stock market is due to fears over inflation, rising interest rates, the Federal Reserve increasing their interest rates, investors liquidating growth stocks and investing into value stocks, investors taking their money completely out of the stock market and putting it into the bond market, and then we also have macroeconomic factors and geopolitical tensions, specifically between Russia and Ukraine, which has caused various investors to take more of a conservative investment approach. And this has very negatively affected long-term growth stocks such as Twilio and Palantir. To put this into perspective, Twilio stock reached a price of around $440 at one point, and now it's trading at $133. Likewise, Palantir Technologies stock went as high as around $39 per share, and now it's trading at around $11. So these companies are extremely discounted compared to some of their highs. So, should investors actually start to consider this as a good buying opportunity for Twilio and Palantir Technologies, despite the recent pullback and the overall crash for the overall stock market, as well as these two particular stocks? Well, first, I want to fill you in on what these companies do, why I think they are both fantastic growth investments for a long-term hold, and what I am personally doing with these companies. So, Twilio operates a cloud-based platform which processes text messages, voice calls, videos, and other content, and this is really good for companies because instead of these other companies developing their own platforms to process text messages, voice calls, and videos from scratch, developers can simply only add a few lines of code and outsource the rest of this to Twilio. And Twilio already has fantastic customers on their platforms. On top of this, Twilio also provides text-based authentication services for a wide range of apps, mainly for security purposes. The best part about this is that they are actively growing their customer count because their overall customer accounts have risen by around 16%, all the way up to over 250,000 customers, which is fantastic news. If we look over here at Twilio's stock price, you can see that initially they had a huge surge, but since then the stock has cooled off and just started to crash very dramatically. The price is actually almost sitting around what it was trading at back in January of 2020, and if the price continuously falls, it honestly just gives people a better investing opportunity into this phenomenal stock. because this means we would have around almost 2 years of free growth, and we could have bought the company what it was worth back almost 2 years ago. However, even though the stock chart doesn't paint a very good picture for the company fundamentally is still growing, and they are very foundationally sound. So overall, I can't even imagine why the stock price is crashing outside of the various macroeconomic factors that we talked about earlier. However, internally, the company is still a very solid company, and to me, it's a fantastic buying opportunity. Likewise, another good buying opportunity is Palantir Technologies, and Palantir is a big data mining and analytics company that helps both government organizations as well as large commercial enterprises by interpreting their data so these institutions can make data-driven decisions. They have their Gotham platform, which is used for their military, intelligence, and law enforcement operations, while their Foundry platform mainly serves their financial, industrial, energy, mining, and automotive customers. However, despite this fantastic news, the PLTR stock price, apart from its initial surge once it DPO'd on the public stock market, has slowly started to trend downward based again on macroeconomic factors. Nothing internally within the company is going wrong right now. The company is still foundationally very solid. So initially we saw a huge price spike in the beginning when it DPO'd, then we saw a long consolidation period, and then the macroeconomic factors really hit the overall stock market, and that's why we are seeing a downtrend, which it would be in investors' greatest interest to buy these stocks on weakness because these are phenomenal growth companies. However, it begs the question, how long are we going to have to wait until we start to see fantastic returns from these two respected companies? Well, first I want to go over why both companies are growing and why I think they are great long-term holds for growth investors. So Twilio's revenues have grown by around 55% back in 2020, and they grew by another 61% in 2021, totaling at around $2.84 billion. The growth in revenues can mainly be attributed to their various acquisitions. However, they are expected to organically grow their revenues from this point on at a compounding annual growth rate of at least 30% year over year from now until at least 2024. Analysts currently project that Twilio is going to scale their revenues by around 36% in 2022 and around 30% in 2023. And if you've watched my videos long enough, you know that a compounding annual growth rate of around or above 30%, specifically for a company's revenue, is literally what I always look for when investing into long-term growth companies, because a growth of around 30% year over year for an extended period of time really starts to add up. More good news is because the Twilio stock price has fallen so much recently, they're only trading at around 6 times this year's sales, which is a fantastic investment opportunity, especially considering that this is a growth stock. On the other hand, Palantir Technologies' revenues have grown by around 47% back in 2020, and then grew by another 41% in 2021, with their revenues totaling at around $1.54 billion, mainly driven by their expansion of their Foundry platform in US commercial businesses. And again, I actually think that their commercial revenue will outpace their government revenue in the future, and that's going to be their main key. Also, similarly to Twilio, Palantir Technologies is going to grow their revenues by around 30% from now until 2025. So again, we have another company growing at a compounding annual growth rate regarding their revenues from now until 2025, which is fantastic news. Analysts also anticipate that their revenues will grow by around 30% in 2020 and around 29% in 2023. However, unlike Twilio, Palantir is still trading at a relatively high valuation because to buy Palantir Technologies, you are going to pay a slight premium because they're trading at 11 times this year's sales. So if we compare Palantir to Twilio just based on their PS ratio, Twilio is a much cheaper stock because we're not paying as high as a premium for it. However, if you like Palantir's fundamentals for a long-term hold, then Palantir could be a fantastic buying opportunity because investors are not buying Palantir off of their revenue generation, they're actually buying Palantir because of their very impressive margins as well as their extremely impressive free cash flows. I do want to say that neither of these companies are profitable on a GAAP basis, and when we compare their gross margins to each other, Palantir does look like the better opportunity right now. Also, analysts anticipate that Twilio's net losses are actually anticipated to widen in 2022 as it starts to ramp up its investments. However, they are going to return to profitability on a non-GAAP basis in 2023, which is fantastic news. On the other hand, Palantir is expected to grow their non-GAAP earnings by around 54% in 2022 and by 30% in 2023. So which stock is technically a better buy right now? Well, actually, before we discuss that, I want to tell you why hedge funds are actually selling these companies. In quarter 3 of 2021, around 96 hedge funds that are tracked by Insider Monkey held Twilio stock. However, that number drastically decreased to around 80 hedge funds in quarter 4 of 2021. So we had around 16 hedge funds drop Twilio from their overall holdings, and the reason for this is due to macroeconomic factors, because investing into aggressive growth stocks such as Twilio is not in the benefit of various hedge funds. Hedge funds don't just want to make profits, they also want to lower their overall risk so they can have good returns for their various investors. And right now, Twilio is too much risk for hedge funds to own, which is why we are seeing hedge funds trim Twilio stock. However, on the other hand, it gets even worse when we look at Palantir Technologies. And not worse in the sense that more hedge funds have dropped Palantir, because only around 35 hedge funds held the PLTR stock in quarter 3 of 2021, and now only 33 hold the PLTR stock as of quarter 4 of 2021 according to Insider Monkey. However, clearly hedge funds are more bullish and positive when referencing Twilio in comparison with Palantir Technologies, and this goes back to our initial price targets, because right now, according to analysts, Twilio has a much more impressive price target and growth runway compared to Palantir Technologies. However, the good news for Palantir Technologies is that it has already surged by around 6% as of today, which is fantastic news, and it looks like the stock market is starting to recover. However, we're going to have to see in the next coming weeks if this positive trend will continue. So, both of these companies are fantastic long-term buying opportunities because they are both very solid companies fundamentally, and their stocks are anticipated to grow over the long term. However, if we compare it to these companies right now, which is a better buy? Well, analysts actually say that both of these companies are oversold right now and both are a great buying opportunity. However, it depends on how we judge these companies. On a price to sales basis, Twilio is clearly a better buy because we are paying less for the amount of growth that the company is going to give us, especially when we consider their revenues and sales compared to their current stock price. However, on the other hand, Palantir has much better gross margins and their overall non-GAAP profits are much higher. So it really depends on how you weigh these companies, but I personally own both of these companies because I like these companies for the long term. But I would love to hear your thoughts down below about which company is better between Twilio and Palantir Technologies. But with that being said, remember to go and smash that like button for more videos like this one, subscribe if you are new, comment your thoughts down below, and I will see you in the next YT video.